Okay, think about the smartphone in your pocket right now. There's a really good chance it has an Apple logo on the back, right? Well, today we're diving into one of the most fascinating corporate stories of our time. We're looking at how Apple, the company that essentially defined modern consumer technology, is suddenly facing this wild set of unprecedented simultaneous vulnerabilities. So let's jump straight into the data for this explainer and unpack exactly what's going on.
Okay, let's dive into this by wrapping our heads around the sheer scale of this empire. We are talking about a $3.9 trillion market cap. Just to put that astronomical number into perspective for a second, that is actually larger than the entire GDP of the United Kingdom. As of early 2026, Apple has mountains of cash, an iconic brand, and an intensely loyal customer base. They are an absolute behemoth. But that brings us to the massive question at the heart of our explainer today. Can this ultimate tech fortress, the legendary walled garden that Apple has so meticulously built up over the decades, can it actually survive a simultaneous three-front war? Because right now, they are getting hit with coordinated pressures from financial markets, geopolitical trade policies, and international regulators, literally all at the exact same time. So here is our game plan for today. We're going to cover 1. The valuation headwind, 2. The supply chain shock, 3. Breaching the walled garden, 4. Apple's defense playbook, and finally, the final verdict. By the end of this, we'll connect all these distinct forces into one cohesive analysis. All right, let's kick things off with our first front, the valuation headwind, clashing with growth. Now, what's really interesting about this slide is the massive expansion we're seeing in Apple's price-to-earnings multiple. If you look at the data from SureDividend, back between 2011 and 2016, Apple shares were routinely trading between 12 and 13 times earnings. Pretty standard, right? But jump to 2026, and wow, that figure has completely ballooned to 31.4 times earnings. Wall Street is pricing Apple at this absolutely massive premium compared to its historical average. So why does this matter? Well, it's the old rule of finance. What goes up often reverts to the mean. Financial analysts project that if Apple's valuation multiple just returns to a normal level, let's say around 19 times earnings by 2031, it creates what's known as a valuation drag. Because the current stock price is just so incredibly high relative to their earnings, that reversion could drag down overall investor returns by a staggering 9.6% every single year for the next 5 years. It's a colossal financial headwind pushing straight against their actual business growth.
Which brings us to front number 2, the supply chain shock, geopolitical volatility.
Because financial metrics, they're really just one piece of the puzzle. Now we're moving from Wall Street data into the very real physical world of geopolitics. Based on research from the Ecomon Journal of Economics and Management, renewed U.S. reciprocal tariffs are having a drastic impact. Before these tariffs kicked in, the component cost of an iPhone 16 Pro was sitting around $549. But since so many parts, like the battery coming from China, are now subject to these new trade policies, the total production cost skyrockets to over $846. That is a massive 54% jump on a single device. And that means intense pressure is coming down on either Apple's profit margins or, well, your wallet.
And the root of this whole vulnerability is a really critical dependency. Look, despite years and years of talk about diversifying their manufacturing to avoid single-country risk, the reality is that as of May 2025, over 85% of iPhones are still assembled in China. Basically, their entire supply chain is heavily tethered to the daily, unpredictable swings of U.S.-China trade relations. Okay, moving right along to our third front, breaching the walled garden, global regulatory crackdowns.
While trade policies are squeezing the hardware side of things, international law is putting a massive squeeze on their software. The friction here is seriously intense. Back in July 2026, Apple actually lost a major legal challenge against the EU's Digital Markets Act, which effectively forces them to open up their App Store. Apple's response was sharp. A spokesperson stated, "We firmly believe the DMA's mandate goes beyond what is lawful and proportionate, threatening to erode decades of privacy and security protections." You can see this is a fundamental clash of philosophies.
But here's the thing, it is not just Brussels. We are witnessing a highly coordinated global regulatory crackdown. From the DMA in Europe to brand new platform governance laws over in Tokyo to really strict App Store regulations happening in Seoul, regulators all over the world are actively trying to rewrite the rules of how Apple governs its platforms. It's this growing international patchwork of laws, and they are all forcibly prying open the gates of Apple's walled garden.
So how exactly does a $3.9 trillion empire fight back against all this? let's look at Section 4, Apple's Defense Playbook, Mitigating the Risks. To really grasp their strategy here, we can look at what's called the 4T model of enterprise risk management. Basically, when you're faced with a major threat, you have 4 options. You can terminate, transfer, treat, or tolerate. I know, it kind of sounds like advice for dealing with a terrible roommate, right? But this is actually the exact framework mega corporations use to handle existential threats.
And this brilliantly illustrates exactly how Apple applies that framework. Take a look at that red X marked B, way up in the top right quadrant of this risk heat map. That represents political and trade disputes. It scores a maximum 20, meaning it's both highly probable and highly severe. Now, since Apple can't just terminate global trade, they have to rely on treating the risk. And they do that by very slowly shifting some assembly out to places like India and Vietnam.
But we have to ask, is that treat strategy actually working? When you contrast Apple against its biggest competitors, a pretty glaring vulnerability shows up. Researchers have pointed out that Apple's mitigation is, well, rigid. It's incredibly capital-intensive. Because their supply chain is so flawlessly advanced and vertically integrated, moving it to India or Vietnam is just this massive, painfully slow process, which leaves them, again, heavily tethered to China. Meanwhile, competitors like Samsung and Google have shown way more agility. They relocated and diversified their supply chains much earlier because they anticipated these exact geopolitical tensions.
All right, let's tie all these threads together. Section 5. The final verdict. Can the empire survive?
We've covered a ton of ground today, from massive stock premiums to that 54% spike in manufacturing costs to global laws literally tearing down their digital walls. And when we combine all of those pressures into a single financial projection, the math is pretty sobering. The Sure Dividend analysis estimates that, sure, over the next 5 years, Apple will probably still manage a really solid 10% earnings per share growth. And yeah, they'll offer a 0.4% dividend return. But because of that massive valuation headwind we talked about earlier, that potential negative 9.6% drag, the total return for investors could actually net out to a completely flat 0%. Think about that. Despite actually growing the business, the sheer weight of their current valuation, stacked on top of geopolitical and regulatory costs, could literally stall their momentum to absolute zero.
Now let's be real. Apple undeniably has the cash, the absolute top-tier talent, and one of the most powerful brands in human history to fight these battles. But looking at all this data, we really have to ask ourselves, with regulators aggressively forcing open their software and geopolitics actively fracturing their hardware supply chain, is the era of Apple's perfectly controlled walled garden finally over? That is the defining question for the next decade of technology. Thank you so much for exploring the data with me on this explainer, and I'll catch you all next time.